Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, January 20th, 2011. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 in Hamilton, and in Mexico City, 10:30. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. On this day in history 2 years ago, President Barack Obama took the oath of office as the first African-American president of the United States. Of course, 2 years from now, another president will be sworn in. Whether it's Barack Obama having been reelected or somebody else, time will tell. We'll now go to our main news. The Washington, D.C. Metropolitan Area Transit Authority is suing Aon, saying that the insurance broker failed to protect them from, quote, avoidable out-of-pocket casualty losses. The suit accuses Aon of failing to inform the transit agency of coverage limits, leading to additional costs of $9 million. This all stems from this: a June 2009 metro crash, the worst in the subway's history, that led to 9 deaths. The newspaper, The Washington Post, reported that the 3-tier liability program established for the metro system requires Metro to pay increasing fees and deductibles for claims up to $95 million. For the $5 million, $15 million, and $75 million coverage layers, Metro pays a $5 million deductible. The authority contends in the suit that gaps in coverage are causing it to pay crash victims and survivors from its funds, not from insurance. Aon told the Washington Post that the suit is meritless. According to the Post, the Transit Authority has paid more than $560,000 annually for, quote, the best service, the best counseling, and the best protection available. But they allege that Aon, quote, has failed in its most fundamental and important responsibility, protecting us against avoidable out-of-pocket casualty losses. Let's see what happens. Royal Sun Alliance announced that their 2010 results will be pretty hard hit by the £255 million in weather-related claims as a result of the bad storms before the end of the year. RSA still expects operating profits between £600 million and £630 million, net written premium growth of 11%. It's a combined operating ratio of between 96.5% and 97% for the full year of 2010. The results outlook has taken some analysts by surprise. The analyst James Shuck at Jefferies says RSA's profit figures are 20 to 30% below his company's estimates, but they haven't yet factored in the weather losses. Andy Haste, RSA's CEO, said, "This is a strong result in what's been an extremely tough year, including the European freeze, the Chilean earthquake, and the coldest December in England for 100 years. To deliver a combined operating ratio of between 96.5% and 97% in these conditions indicates strength." I tend to agree with them. Well, this is like a soap opera, but here we go again. Private equity consortium Achilles has extended the final, it's like double, triple secret probation, the final date by which its offer for Lloyd's insurer Brit must become unconditional. It's also known as Day 60. They've extended it to 1 p.m., 1300 hours on the 18th of March. Day 60 was originally set for January 22nd. The current deadline for shareholder acceptance of the offer remains at the 22nd of January. This follows an extension announced on January 11th. Achilles, Brit, and the Takeover Panel extended the Day 60 deadline to allow the FSA time to complete its review of Achilles' clearance application. Yesterday, the consortium received clearance from the EU, and so now the only regulatory conditions it has to get through are Lloyd's and the FSA. Lloyd's has already said that they're fine with it if the FSA grants clearance. I'll tell you, we'll see what happens. Tom Jackson, who had been the head of Everest Re's London operations, is moving on. He had been the general manager and chief underwriting officer at Everest's London branch. The Insurance Insider is reporting this. They're also saying that Jackson is thought to have left Everest by mutual consent. On this early stage so far, we believe Paul Tester will be taking over. Best Wire is reporting that Novamax in Malaysia has gained regulatory approval to start talks with Liberty International Holdings. Liberty is apparently interested in acquiring Novamax's 52% stake in Malaysia-based MI Continental Insurance. The Malaysian Central Bank and Financial Regulator has no objection against Novamax's acquisition talks with Liberty. The negotiations, however, have to be completed within 6 months from the date of approval. MI Continental was established in 1976 with CNA as one of its shareholders. The non-life insurer offers fire, marine, health, motor, and other specialized products through 12 separate branches in Malaysia. The other day it was Florida's insurer of last resort asking for a rate hike. Today it's Louisiana. Because of rising rates in the private market, the head of Louisiana Citizens Property Insurance Corporation is going to ask the state insurance department to approve an average 9.9% increase. The filing is expected to be made next week. The insurance commissioner is going to rule in no more than 60 days. Policyholders in the Citizens Insurance Coastal Plan would see an average 12% increase, while policyholders in the non-coastal areas would see about an 8.8% hike. We'll go to a word from our sponsors and come back with the rest of the news. This is an interesting story. It's a little bit of the legal equivalent of a Hail Mary pass that had been thrown by the securities firm Cantor Fitzgerald, which suffered a tragedy on September 11, 2001, when their offices were destroyed at the World Trade Center. Several hundred of their employees were killed. A judge yesterday ruled that Cantor Fitzgerald cannot claim profits lost from the death and injuries to its personnel as damages in its lawsuit against American Airlines. A U.S. District Court judge in a pretrial ruling yesterday disallowed Cantor's demand for those damages from American Airlines, whose plane struck the tower housing Cantor Fitzgerald's offices. American Airlines Flight 11, of course, originated in Boston. It was the first of the 2 hijacked planes to strike the World Trade Center. Cantor Fitzgerald lost 658 of its 960 New York employees that day. Cantor Fitzgerald sued American Airlines 3 years after the attack, claiming that AA had failed to screen and detect the terrorists and then permitted them to board and permitted them to commandeer the plane. Cantor Fitzgerald, in a May 2010 filing, said that it sought more than $945 million in damages for the destruction of its offices, furnishings, and technological infrastructure, and for business interruption. American Airlines asked the court to limit those claims, arguing that business interruption damages arose from the death of the firm's employees. The judge agreed, saying that Cantor's claim had been substantially inflated by losses flowing from those casualties. The judge said no one can deny the emotional and financial hurt suffered by Cantor Fitzgerald and the employees of its and the families of its officers and employees, but we must eliminate the impermissible aspect of this damages claim. Cantor has until February 28th to amend its claim. Richard Banks, the editor of the Insurance Day in London, has a very interesting article today. He quotes extensively our friend Karen Clark. Mr. Banks says that cat modeling firms dramatically overstated the likely American hurricane-prompted insured losses between 2006 and 2010. According to Karen Clark, who was the founder of AIR Worldwide and now an independent cat modeling consultant. She says that so-called near-term models that were introduced into the modeling industry after the 04 and 05 devastating hurricane seasons are the particular focus of the problem. Ms. Clark notes in the first instance, each of the three major cat modeling firms, her old firm AIR, RMS, and EquiCat, projected insured losses between 06 and 2010 would be at least 35% above the long-term average. Clark acknowledged that there were some later alterations to those projections. For example, AIR dropped its figure to 16%. AIR made some minor adjustments to its own figure, and RMS came down to figures 25% higher than the long-term average. Those figures, those projections, translate into significant dollar loss figures, assuming long-term average annual insured hurricane losses of $10 billion a year. Like AIR's projected losses were $60 billion, EquiCat was $68 billion, and RMS $67 billion. Clark says that the cumulative actual total losses were only $15 billion, a figure less than one-third the long-term cumulative average of $50 billion. She said, now we've completed the first 5-year near-term hurricane model, it's become clear, as our previous reports have found, a short-term time horizon is not credible for estimating insured losses from hurricanes. Hooray for Karen Clark, voice of sanity. Maybe we'll get her on the show and we can talk about that. And some good news for the American economy, claims for unemployment benefits fell by 37,000 last week, down to 404,000. Reversed a sharp increase of just 2 weeks ago. Economists had been expecting a fall down to 420,000, so we did better than that. The stock market's already reflecting that. Well, Neil Curry and company at Renaissance Re are happy. They've been upgraded to A+ from A by Fitch. Fitch said that the upgrade reflected RenRe's continued strong leading position in the P&C reinsurance market and favorable underwriting results. The one-notch upgrade is a significant achievement for RenRe, especially in a market environment where reinsurance rates are falling. Well, last Palmer with his wife, I wonder what he was there for. Oh my goodness, Goldman Sachs CEO Lloyd Blankfein was there. The president of Motorola, Greg Brown, was there. The actor Jackie Chan was there. It's a little bit of a dicey invitation. Former President Bill Clinton was there. The mayor of Chicago, Richard Daley, was there. The head of JP Morgan Chase, Jamie Dimon, was there. Tom Friedman from the New York Times was there. The world is flat, or whatever his book is. The Lexus and the Olive Tree. In case some musical entertainment was needed, Herbie Hancock was there as a guest. Jeff Immelt, the president and CEO of GE, was there. The president and CEO of Coca-Cola, Muhtar Kent, was there. Egad, the head of the United Auto Workers was there. Robert King, I'm sure he was placed far, far away from the Chinese president. The American ice skater Michelle Kwan was there. Oh, the president of Boeing was there, James McInerney, and his wife. Who else was there? These are always fascinating, I'll tell you. That's probably about it as far as former Secretary of State George Shultz was there. Former Secretary of State Henry Kissinger was there. And oddly enough, the governor of New Jersey, Chris Christie, and his wife were there. Christie's a Republican. Very interesting. That's the news for today. We're going to be airing the interview with Tom Bolt next Monday and Tuesday. We'll be advertising that on our websites beginning later today. If you have any questions or breaking news, please report it. If not, we'll see you tomorrow, and thank you for watching.